I know. It's.
I feel gross for drinking a Chick-fil-A iced coffee right now.
I don't want to own a Chinese stock if there's any possibility for it to not be fake.
If they have any real revenue, you don't want that. Nobody wants that.
No. If there's any semblance of legitimacy, I want nothing to do with it.
I mean, we're there. That's the place we're at right now. That typically irresponsible behavior is the only responsible behavior. You have to own the risk.
There's a time and a place for everything.
I was breaking your balls yesterday for owning Tesla because there's not enough beta in this kind of market. I mean, that's where we're at, dude.
That is the quote of the day. I'm breaking your balls for owning Tesla when there's not enough beta in that. That is
crazy.
Man, if that is not telling you what the kind of environment this is.
Steve, there are instruments. There are instruments for that, now. You don't need to
I'm
buy
not
Tesla.
into those instruments.
I know.
Well, it won't last forever. And you know what ends up happening when you get to this part of the cycle? It becomes pretty easy. Most people are making money and getting lazy. And the way you really separate yourself and gain an edge, it's the ones who start paying attention to that moment when the music stops and protecting themselves the best, right? And protecting all those gains that they made. That's what real traders are doing right now. They're planning for that. And that's the next tough part. Making money out here is easy.
I just want to be clear. I get called a perma bull, particularly in bull markets. Right? I've noticed over the years how that works. I would love nothing more than a crazy bear market. Everything gets hammered. Real estate gets smoked. Me and Strazza picking up, what do you call them, Strazza? Unique properties? What's the word you use?
Rare assets.
Rare assets.
Hey,
right.
Have you seen Sphere? Speaking of rare assets.
Trying to get me to buy a house in St. Thomas or some shit.
Yeah, I love that. I love that idea for you. Told you that before.
So that I could never go? I could just look at pictures of it?
Oh my God, Sam. Jeez. The boys are in Abu Dhabi and they just seem to be having the best time.
Yeah, it does. It does appear that way. All right, let's start the show. This is getting silly.
I can't take no loss. I don't even know what it costs. I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, I can't take no loss. I don't even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
Are we live? This is the morning show, everybody. Welcome. Happy Thursday. Happy Yom Kippur to all those who celebrate. On today's show, we'll have Jeff Mackey stop by. We'll have Sean McLaughlin. Actually, will we have Sean? I hope we do. Sean was hanging out with Jeff in person yesterday, so I hope Sean can join us. We'll see. Kenny Glick will stop by, and today is a day for unprofitable anything. Unprofitable tech, unprofitable, whatever you want to buy. Whatever you want. That's the plan. Chat, we're all good. Everyone is good. We're here. We're making money. We're dropping likes. Yes, capiche? Onward.
All right, I want to talk about the bear case today. Right? I want to make the bear case. Can we do that?
Yeah.
It's not easy.
What do you think the bear case is, Strazza?
Good luck.
What do you think the bear case is?
I thought that you could start to. I was looking at crypto to add to a bearish data point list, and the moment they had to dig in and rally, they absolutely have. So I have nothing. I think the dollar's due for a bounce. That's bearish.
Can I guess, JC, what you're gonna say?
You sure?
Semis.
Mm-mm.
I mean, it's hard to include semis as the bear case because we have, right? Semis have been, particularly in going into August. Remember?
Hold on.
Semis.
Bearish?
Hold on.
No. I'm not saying it is bearish.
But the bear case we were making about semis was in late July, early August. We're like, okay, if semis failed here, that would be bearish, right? Semis did not fail, and they ripped in everybody's face. So none of that is bearish, but that was the bear case in August. It's like, okay, you want to find something bearish? If this happens, that would be bearish. And we're pointing to semis. That did not happen, obviously. So I got two more of those for today. slide 2, and then we'll get into state of the markets. But this one, I wanted to just get the bear case out of the way. I've been thinking about it a lot. I think it's responsible a couple years into a bull market to see what sorts of things can happen for us to let up on the gas, because we're making a lot of fucking money around here. So I'm trying to keep it, right? Let's be serious. So I think, to me, as somebody who I think we can all agree, I probably look at more charts than, I don't know about anybody in the world, but I'm probably in the conversation of the person that looks at the most charts in the world. So in my opinion, this one, of all of those thousands of charts that I look at every week, this is the one that I think is most vulnerable to indicate weakening underneath the surface in the market. Again, to be clear, closed at all-time highs yesterday, which is the opposite of weakening, opposite of bearish. There's nothing bearish about discretionaries making all-time highs against staples, which it did yesterday. Nothing bearish.
No.
If you are bearish, you think that the market is going to fall, I think this needs to be front and center, because if it does break, then we can have that conversation. But if it doesn't, there's nothing to talk about.
Yeah, but I hate the way you go about like having these bearish arguments, because here's how bullish the overall evidence is right now. JC's bearish data points that he's bringing are actually super bullish data points. He did the same thing last week. And then he's saying, but if they fail, they're bearish. You're right. But there's no evidence that any of these things are failing. These are valid breakouts. The market is so
By the way, there was no
right
evidence that the semis were going to break in August either. It was just like, hypothetically, if they break, that would be a problem for this market. In this case, hypothetically, if this breaks, that would be a problem in this market. To Strazza's point, that hasn't happened at all. Closed at an all-time high yesterday, right? So none of that is happening. But if you're looking for, which I am, I don't know about you, I am looking for signals out there that could potentially suggest that maybe we shouldn't be flipping the book on Chinese scam companies and, just ridiculous things that we've been doing, like all this high-tech things that we don't understand. It doesn't matter, right? The less we understand, the better. The higher the probability of a scam, the better. When does that change? I think that could change if this breaks. That's it.
JC.
Truth is that the biggest bearish data point right now is the fact that there are absolutely no significant bearish data points out there.
Yeah, but that in and of itself is not bearish. Look at
the only place you could go from here is froth and euphoria.
Look at slide 3. I like the feedback. So, and then we'll get into that. Russell 2000 failing up here. Again, evidence of failing would be deterioration of breadth as we approach these levels. We're not seeing that. Deterioration in momentum as we approach these levels. We're not seeing that. So like the signs that you would tend to see ahead of a potential failure, we have yet to see. However, I think it's important to bring up, if you're looking for the bear case, the fact that the Russell 2000, Strazza and I both agree, despite all-time highs in the monthly, despite new all-time highs on a quarterly basis, despite new all-time highs on a daily basis last week or a couple weeks ago, can't say they stuck the landing just yet, right?
Totally agree. This could be a good one. If we fail here again, for sure. Like, small cap's got to get it done. When you look under the hood, JC, evidence is pretty strong from a breadth standpoint. I think they're going to get it done here.
You look at the components, right? Who have been the leaders in small cap land? It's been technology. Technology is making new all-time highs. Small cap tech. Small cap industrials have been very strong. Also making new all-time highs. Discretionary continues to look good. So it's really more about the small cap financials. Those regional banks, can they get going? And the small cap healthcare, which is essentially biotechs, which made small cap healthcare officially yesterday,
in the small cap space.
6-month highs.
In the small cap space, the healthcare sector is as important as anything, right? Small caps are different from large caps in that way. And I think the news and the price action this week in the healthcare space, I know it's mostly dealing with large caps.
What's been the news? What's the news out of curiosity?
Pfizer basically did a deal with the government where they are getting rid of, like, basically potentially impose tariffs on them for making deals about drug pricing. And what that's really done is it's a huge, like, regulatory overhang, right? Because there's this big looming pressure on the whole industry, not just about tariffs, but like RFK is a crazy person and like drug prices and all this stuff. So I think this was like a huge clearing event, really, for the space, because it's the government basically, as if anybody needed more evidence that the Trump administration is ready to do a deal with these public companies every step of the way, right? I mean, how many more times do we need to see this? But I think the market is taking a big sigh of relief here, right? And what was basically regulatory fears are turning into, a relief rally, which is sick. And I think it's
I want
really
to say
good.
something about what you were talking about, how biotechs are as important as any group in small caps. What Strazza's alluding to here is that you got over 200 biotechnology companies in the Russell 2000. So you have a lot of stocks in there. So I agree that for the Russell 2000 index, those biotechs are critical, definitely. Now, with that being said, small caps are one of my favorite groups of stocks for a lot of reasons, but particularly because of the lower correlation that they have on an individual basis relative to its index, right? In bear markets, when small caps indexes are selling off, you're still going to have small caps that are doing great. When small caps are doing great, you're still going to have small caps that are doing terrible, right? You see more of that in small cap land than you do in large cap land. I love that. Despite the Russell 2000 not making new highs, the underperformance in regional banks and biotechnology stocks, small cap tech has been making all-time highs. Small cap industrials have been making all-time highs. There have been huge winners. Small cap materials, junior gold miners doubled this year, right? So there are small cap stocks that have been doing very, 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 very well, like historically well, despite the indexes not really making that progress. And that's something very common that we see in small caps. So something to keep in mind. Right?
Interesting comment about private credit. I'm with you, JC. Market internals have never been this good for small caps this whole cycle.
Why do you say that? Why do you say market internals have never been good?
Breath.
When was the last momentum thrust? We got one recently, right?
I don't think so. Not enough. Nothing that really stands out. But you know where we got a momentum thrust yesterday? Pharma, healthcare, across the board, huge level being taken out.
Can I see that data?
Huh? Throw the chart up.
The thrust data?
Yeah. Fuck yeah. Right in post about it right now.
Yeah, go get the thrust data. Let's do a little state of the markets.
It's here.
Let's do a little state of the markets, and then we'll get to the.
I finished my biscuit.
All right.
All right, we got the Dow futures doing nothing this morning. 46,700. New all-time high, Spencer, for the Dow Jones Industrial Average. Not something you see in bear markets is new all-time highs. S&P 500 also not doing anything this morning. Actually up 0.25%. It's not nothing. 17 handles. That's 67.78. Spencer Israel. That's the highest level ever in history, going all the way back to the dinosaurs. S&Ps have never been higher. NASDAQ 100. Also, never been higher, up over 0.5% on the day, 135 handles, 25,150. I'll say that again. NASDAQ 100 futures, 25,150. Never happened before, ever. I got my Dow 25,000 hat. Now we got the NASDAQ 25,000. How do you like me now? 30-year bond futures doing nothing at 117. Crude oil down 0.2%, 61.40. Copper up 1%, 493. Copper knocking on that $5 door. Gold up 0.25%, 3,900 and change. Silver flat this morning, 47.67, with the VIX still above 16. How is the VIX still above 16? Wow. Over in funny money land, Bitcoin continues to make big moves. 119,300, up another 600 points. Ethereum 4,400, up another 1% on the day. Solana 227, up 2% on the day. That brings the total crypto market cap, Mr. Spencer Israel, 4.04 trillion. 4.04 trillion, highest monthly close ever for total crypto market cap, getting October off started with a bang. Bang, bang.
I also like this comment in the chat from Robert. We're looking for bearish data points. Maybe the financial.
I love this.
Maybe a little bit of financial tomfoolery going on.
Where? Financial tomfoolery?
I was just going to say the same thing. I think this is a great comment by Robert about private credit. Normally, I would be an ass and say this doesn't matter, private credit. But 100%, I think there is a bubble forming in private credit. I think it's been forming for 5 to 10 years now. To be clear,
Can you
the
explain
reason
what
for
that
this,
even means? What even is it for us that like we focus on liquid assets? What does that mean?
they're trying to make these liquid. Talk to Blackstone and
Yeah,
BlackRock. There's a big push. They're going to be liquid soon. They're trying to get them in everybody's portfolios in the same way that they did with ESG funds 5 years ago, and they're going to be wildly successful.
Private credit,
and also
as
just
opposed to like publicly traded corporate bonds.
no,
The
but
reason why
also just
credit-
private companies. Also, JC, it's twofold, right? It's
Oh, I
private.
see what you're saying.
There's
Right.
ways
Got
to
it.
securitize these things,
Yeah.
right? These guys are really good at it. They could fucking securitize anything.
Well, if they haven't even started doing that yet, then the problems haven't even gotten started.
They've started.
No, it's happening.
Oh, it's
It's
happening. Okay.
Yeah.
And
So
are
the
things blowing up yet or no, not yet?
Not
No,
yet.
no. I think
So when we
everything's fine
start
for
to
now,
see,
but-
a little bit of history lesson, guys. But when the Bear Stearns, before that debacle and that blow up in Bear Stearns back in 2008, a year earlier, Bear Stearns had a couple of funds already starting to blow up. I remember, you guys are going to laugh. Don't laugh at me. But I remember vividly seeing the Dow Jones Industrial Average down 400 points in one day and like freaking out. This was like early 07. This was early on, like nowhere near the top yet. But it was like that first crack. And I was like, wow, the Dow's down 400 points. That's crazy.
But you're right. There's truth to that. Like these things actually happen very slowly at first. They make movies about them, and then we look back, and it seems like in the history books they happened in 2 days, and everybody was going crazy and jumping out of windows. But this builds over years and years and years. When did the home builders peak? 05, 06?
06, when they peaked as
Right.
soon as the ETFs launched in 06. I think May 06, they launched the ITB and the XHB at the same time within like a month, and they peaked right immediately and started and lost 85% or something like that. Perfect.
And the global financial crisis is why there's a bubble forming today in private credit. Okay. The reason all of that business is moving to the private market.
Because the banks won't give them.
The banks can't. They're all taped up, right?
No,
This
you're
is
right.
post-financial crisis regulations that are now causing this next bubble. That's how it happens. And I don't know, Robert. I'm going to ask my friends who audit these companies, what they think. I don't understand from a materiality standpoint or a counterparty risk standpoint. I have no clue really, but interesting comments, and I think definitely worth paying attention to.
JC, I love how you have like random days of market movement burned into your brain. Days that are not historical. Like I'm not talking about like days when the market crashed. Just like a random Wednesday from 2006, right? Where the Dow is down 400 points.
Yeah.
It was big at the time.
It was 07. That was the biggest down.
Whatever.
That was the biggest down I had ever seen in my career up until that point.
Just random days from your 20s where the markets are, yeah.
I was 25, 24.
We all have those days, I feel like.
And it was a Bear Stearns fund that was blowing up. That was like the first crack. That was the first.
Most of the
all right,
days-
show me the healthcare. Show me the healthcare. So biggest 2-day rate of change since the post-COVID rally. All right.
You got to start somewhere, dude. It's a big deal.
Why
You
2
zoom
days
out.
though? Why 2 days? Just cause it was a crazy 2
It was
days.
too big because it was 2 big freaking days. We'll do 5
big
once.
sticks.
Yeah, we'll do 5, in a couple days and see what that looks like. But this is enough for me. It's enough for me when you combine it with the fact, first of all, you zoom out. This is a big level. This is where price peaked a number of times a few years ago, right? We had trouble getting through this level, finally broke through. Then you had like a big fail. Like it was a retest plus a failure, right? A shake back below. I should have a big line drawn here. Let me give you the level. You see it, right, JC? I try to keep my charts clean. Call it like 142-ish, right? Low 140s, big polarity zone. Breaking back out, erupting back above that level here with momentum. If you drop a VWAP from the all-time highs, we just took it out. If you want to fib out the drawdown from last year's or 2024 highs, this is the 38%, right? This is a beautiful little, intermediate term reversal pattern. And the way I think about healthcare is the same way I'll think about small caps or solar energy or ARC stocks last year. Or pot stocks even today. We're getting late in this bull market. We're saying crazy things. I think we're literally getting to the later stages, the buy everything type of market. And you got to look at groups like small caps and healthcare and say, come on, guys, are you going to ever join this party before it ends? And I think the answer is pretty much across the board, yes. Typically, when you look back at the end of a bull cycle, man, most things participated to the upside. The vast majority of things. You always have your big losers that just never bought in. But healthcare, let's go. And I think that the sentiment background for this group of stocks right now really lends itself to some big moves coming out of the space. Big catch-up rally. You saw a momentum squeeze yesterday. My friend texted me. He said, "What is the short interest in Pfizer?" I laughed because this was a volatility explosion. It had nothing to do with shorts. These are all new buyers. The short interest is 2% in Pfizer. These are new bulls. I love this action.
I remember not too long ago, you making fun of me for buying boring healthcare stocks.
I've been writing about bullshit. I've been writing about it. It's all on the blog. We're going to link back to
my
post
UNH. You guys laughed. You guys laughed at my Elliott wave count on the UNH. Laughed at me.
In fact, I've been pounding the table on Pfizer and Merck, and I've been early and wrong as long-term positions for me. Been talking about these dividends for a long time. Been accumulating these stocks. I'm super bull healthcare here, especially primary trend.
Well, now with that momentum thrust, you're just such a momentum whore that you're just like, oh, healthcare is sexy again. Oh yeah. Oh.
Well, whether you want to call it a volatility or a momentum squeeze, it makes no difference to me. But this is not a short squeeze. This is a technical move.
The UNH was a little short squeeze.
Steve,
but yeah.
Steve, it was a technical move, but there was also news. So
he's just trolling me. He's just
a news-driven move.
He says technical move. He knows I want to strangle him.
All right, sorry.
Sarcasm.
Sorry.
Ask the reporter who asked me about a technical move once. He doesn't call me anymore.
Technical move. You know what kind of like criminal you need to be to call something a technical move? Like you can't be that stupid. It has to be malicious. Can we talk about this momentum divergence? Speaking of being a momentum whore, momentum divergence. This is pretty nasty, bro. Look at a little double bottom there, a little healthcare relative. How do you like me now, huh?
Yeah, I think it's great. And I think you go to the pharma and the biotechs for now. You go to what's working. We're in, dude. We're loading up. In fact, we should have had a position on Pfizer. Oh, well. I'm talking about calls. Because if you're long calls, let's talk about it. In a stock like Pfizer that trades like a fucking bond, okay? Those calls are priced based on the stock's typical volatility, which is dead money. Like the calls are priced for the stock to not move. When you get the biggest, 2-day move in, was the biggest 2-day move ever for Pfizer? I mean, this is
look that up. I'm curious. Can you look that up?
I'm looking it up right now.
I'd like to see the relative move.
Right now.
So can I get a Pfizer SPY relative? ROC?
Can I get a hell yeah for these stocks? Because this is absolutely huge. 14% in 2 days. You got something similar at the 2016 lows, late 2016 lows. Oh my God. Go look at that at the late 2016 lows. But no, this is the biggest.
Not even on like vaccine day?
This is the biggest ever. No, COVID didn't come close.
Hey, run those scans. Let's get Kenny in here, and then we'll get back to those scans after Kenny.
I'm in the 90s right now, and there's nothing bigger. This is the biggest 2-day move I think ever. Fonz might know. Here we go. 1987.
Kenny, what are you saying in the chat?
Can you give me relative, please?
I wasn't even born the last time Pfizer made a bigger 2-day move. So you got to get on board. 6% dividend. What more do you want? My friend is a Pfizer whale. Shout out Tommy. He has a problem. If you're listening, I love you, buddy. He gets too big in everything, and he can't stomach the smallest drawdown. So he oversizes everything, and then the second it moves against him, he freaks out and he bails. So he reached out to me, earlier this year, said, I need a good one. I said, okay. I said, I got the perfect one for you. I'm looking at Pfizer down on the lows, trading at like 10 times earnings with a 7% dividend. I'm like, this thing can't go down anymore. It's perfect for Tommy because he's got to own something that doesn't go down. So I'm like, okay, this is great. He sends me a screenshot of his account. He buys millions of dollars worth of the stock. I said, oh God. I said, it's way too much. So basically what he did is he adjusted his crazy position sizing for the low volatility of the stock. And it's been great for him. Tommy's just so happy, sitting back, collecting his dividend, loving the Pfizer, having the best week ever this week. Better week than anybody.
Good for Tommy.
Love to see it.
Good for Tommy. All right, Kenny's in here talking about Viagra or something. I don't know. Let's bring
Viagra Kenny. Was bigger. I see what you did there.
Let's bring Kenny on.
It's been a long time coming. They ain't come for my clock, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
So much to unpack there. Wow. Viagra was bigger. Pfizer had a bigger move back in the day when Viagra
So
was.
Pfizer owned Viagra.
They
Yeah,
bought it.
they were the first ones, and that you had a pretty good move. That was when
Yeah.
my dad was involved. I think he still might own Pfizer. I'm not sure.
Involved how?
Uh,
What weren't they like trying to cure cancer or something like that? What happened? It was like by accident, right?
Viagra. I forgot the whole story at this point.
They were trying to cure something, and that happened by accident.
Kind of like that liquid paper back in the 70s, right? The whiteout was a mistake as well.
Was it?
Yeah. A lot of creations were like that, like acid. Hey, how you doing?
Hey,
nice. Speaking of acid, I started buying some of these psychedelics this week.
Mind Med, yes, MNMEDs. I like all that stuff. I still don't like the weed stocks, so I think they're still just all headed to zero inevitably. But
the psychedelics ETF hitting new highs yesterday.
Yeah, the funny thing is, I have a penny stock that the original symbol was spliff. I don't even know if it exists anymore.
Nice.
It was a weed and a psychedelic company. Yeah, it doesn't even exist anymore.
I'll take the under on that. Yeah, no.
I probably have it in escrow in one of my my retirement accounts somewhere. Maybe
weed and psychedelics. So you're getting the best of bar barrel.
And the symbol was spliff. How could you go wrong, right? Oh wait, it went to zero. That's how you went wrong.
Vertical Peak Holdings. It's 0.004 cents.
All right. So you're saying I got a chance? Yeah, it's somewhere in my account. Yeah.
Kenny, Spencer started out the conversation this morning, even before we went live on the show, just talking about how today is just, what were you calling it, Spencer?
Yeah, today's like unprofitable everything day, right? Just buy. If it's got 4 letters in the symbol, buy it. If it's got an X, in the symbol, or a Z or a Q or some other weird letter, or
sure.
Yeah.
Right? I mean, if you're not looking at what the QQQ is doing right now. So what happened to seasonality? It lasted for about an hour and a half, right? That was it. You got an hour and a half of selling, which if you think that was actually really selling, it wasn't. We still haven't actually violated any prior VWAP. So
well, to be clear, this is the third best 2-week period of the year, right? So if you break up every month into halves, so you have 24 half months, the first 2 weeks of October is the third best 2-week period of the year. Fun fact for your season.
I don't know. Could we get any better since May 12th? I mean, since that power gap on the market, which trapped all the people on the wrong side, we've been just ripping every day, and nothing's really changed as far as I'm concerned. And to my calculations, and again, when I threw this number out there, we have a 600-800 call spread on the Qs. That's what I put on just as a goof in May, and it's working pretty well. 600-800 long-term call spread. Anyway, the bottom line is, if you just do a little math and you look at the Qs and just average out what this market, the expectations, we're looking at 1,043 on April 20th, 1:43 p.m. And when I threw that out there, going, what the hell are you talking about? Meanwhile, that's 8% to the end of the year, a measly 9% next year. 2027, we get a 22%er, and then we start 28 with a nice 12% start to the year. That gets us to 143 on April 20th at 1:43 p.m. It's not that far-fetched, people. So if you're going to be shorting this market to try to make a $2 pullback on a $600 product that's about to go up another 500 points, why? Stop it. Okay? Stop it.
Shorting is short-lived.
And you're going to die. Trust me, friends. I was doing some calculations with my dad, and, I've been trading since 96. I had one good year shorting the market, and that was by accident because I was trapped as a shorter in the bubble, and I was getting crushed. And when it finally popped, I just, sat there and let it ride to the downside. Since then, nothing has worked. I've been involved in crashes where I haven't even really made any money because you're covering on the way down, and then the next 20%, you're not even short anymore. So it's like it's really is becoming a waste of time. Not saying as a day trader you can't short stocks.
Yeah, I was about to say you're shorting them all the time.
Right. But you cannot do that for any extended period of time, especially on the QQQ. You cannot short the Qs right now. They are on a mission to go up at least, I think, another 100% from here, easy. So what's the point? What's the point of shorting? You're going to try to make 80 cents on a $600 product that's about to rip 5 points in your face? And with these 0-date options, every pullback You buy those options 3 points out of the money. They cost 30 cents and they close at $2 every day. And this is an everyday occurrence. So if you just buy the dip on the Qs with some 0-date options and hold them into the close, you're generally doing 5 to 10x a day. And every day it's the same day. I thought I've seen a lot. I've never seen anything like this before.
Groundhog's Day over here.
It's legitimately prohibited to go down right now.
All right, so that's at the index level. What about individual names? Anything you're looking to fade today, or you're looking to be just?
Well, here's the funny thing. We were just talking about this also. If you picked 10 stocks right now that weren't involved in the S&P 500 or the QQQ, 8 would suck, right? 1 would be great, and 1 would do nothing. And you're sitting there going, "Oh man, this market sucks." Yeah, okay. It's just join the club. But if you're trading individual names, you know what? It's FRMI. Let's go. IPO yesterday, right? Come on now. IPO come out in bull market, breaks 27.50. Where's it going? 30. 30 gets you 32.50. 32.50 gets you 35. 35 gets you 37.50. 37.50 gets you 40. The stock just hit basically 39.50 last night and another double top this morning. What do you think is going to happen when it breaks?
Folks, what's the ticker symbol for that?
FRMI. What do you think is going to happen when this stock breaks 39.50? It ain't just going to 40. It's going to 50 and then 80 and then 120 and then 300. And you got to start thinking every stock is going up 10x from their lows. And I've done some research. If you go back and check the lows from the last 2 years and some of these stocks that have emerged out of those Andy Dufresnes and those Kardashian bottoms, they've all gone really 10x off those lows. So when you find one of these awful stocks that does come back, look at the lows, you're probably going 10x. And that's the way it's been. Even this IPO that I was involved in, ANGX, right?
Shout out to you, Kenny. It's up 20% this morning.
Right? No, but it was awful. First, it came out and crashed.
Yeah.
So 15 got to 12, 10 got to 10. Once this thing went under 10, I was like, okay, this thing's going to 5. And then it went under 5. I'm thinking, all right, it's going to 0. But then comes the turn. And then when it breaks 5, stocks just don't rebound now. They double. The stock went from 5 to 10 in a day, in less than 24 hours. So you're telling me you want to be a shorter in this market? You better not be. And if you are, just play those fades and be ready to get involved in the faux show bro, because every stock is a faux show bro away from ripping your head off. And that's where we're at.
Kenny, I was at S&B Capital the other day and somebody said faux show bro.
Thank you. It's spreading.
And I actually, in the presentation, explained what a faux show bro is. It was unsolicited. Just came up. They're like, JC, do you know about the faux show bro? And I said, do I know about the faux show bro? You bet your ass I do.
It's so funny. You know, it's funny. What's even funnier? You want to hear this? You ever see the movie?
At the end of the day, there's a lot of trades and a lot of systems and a lot of smart people we know that use a different style of a faux show bro, but the concepts are very similar, in which the shorts get caught, the longs get stopped out, and then they all pile back in at the same time. There's a lot of different ways to look at that on various time frames. By the way, we look at that on long-term time frames. You're looking at it on an intraday basis. You're using anchored VWAPs. There's different ways to quantify these fake outs and shakeouts and then ultimate breakouts. You just call it better than anybody else, right?
Thanks. It was at one point we called it the dip and rip, but faux show bro is fun too. Let me show you how it works on every time frame and on every stock. So here you go. Here's the one trade I did so far.
And I'd love to see a potential setup for today too.
Okay, I'll give it to you right here, because this could be this. This is some stock that, again, it was on my radar because apparently I've traded this in the past. To me, it's just Tusha, TSHA, my Yiddish friends. There's your prior
gene therapeutics. Okay.
There's your prior day VWAP is orange. Today's VWAP is blue, right? So you missed the first move. Okay. It starts to rally without you. Okay. It's another stock ripping without you. But then it pulls back. And the hold is the fake out. So there's a little fake out, shake out, break. And then another one, fake out, shake out. But the shakeout never broke prior day VWAP and then goes back above the VWAP. Boom. You're in.
So that first move is the fake out. The move below the blue line to the yesterday's VWAP is the shakeout. Right. And then the breakout goes back above the blue. So faux show bro.
Right. Faux show. And then the bro is when you start really getting above that double top, but you want to buy the VWAP. And what's great about this trade is that when you're wrong, and occasionally when it doesn't work, right, you're buying here at 350. There's your out, 25 cents. Clearly defined
You're putting
trade.
your stop below the prior day VWAP. You're not putting the stop back below today's VWAP.
I'm putting if I'm buying here at 350, I'm using the 325, and then I'm going to use the low if I want to let it breathe a little bit more, 315. I would never let it go back below a pre-market low. Done. Things going to zero. But in this case, again.
And so what? A move back above today's VWAP is the entry for a new bro, if you will.
Right there, right? It's right there. As soon as it gets, and then what I liked about it too is that we do the VWAP shuffle or the jiggle. So right there, it makes its mind up. It's saying, okay, what are we going to do next? We got back to VWAP. Who's in charge? Starts to lift off. The bulls are in charge. You got limited risk. Buy it. Sadly, I was selling right here because I sell when it gets to prices where something happened once before. I sold the majority right there. And then at the pop towards $4, by $4, I'm pretty much done with this trade. By $4.20, I'm out. And then it ripped to $4.75. But now I'm looking for it to faux show bro again. Prior day VWAP's up here. So if we get that pattern to show up right by that orange line and we turn again, I'll try my luck again. And that's the way I trade.
But your entry won't be until you cross above today's VWAP again.
Right. And sometimes, if it starts flirting around there with that 390 and holds, I'll buy it immediately at 4. I won't wait for the blue line, get a little head start on some, and then I know I'm right when it breaks over the VWAP. And I like to see how it tested it already, breaks it, we're going to go. But take a look at this. This is FRMI. This is that IPO, and I think it actually starting to move right now. Hang on a second. So here's FRMI. I legitimately think the stock's probably going to go to 100. Because we're in the sickest bull market I've ever seen, and I've been doing this 30 years. So there it is. This could be the foe in the show. So it breaks the new low, comes right back. Fake out, shake them out. Now you got back to the VWAP. Now it's time for it to jiggle and make a new decision. As long as it doesn't break down, if this next turn starts to rally, I'm in. And then I expect it to get back to those highs of the day. Breaks the high of the day, I'm thinking $50. And that's the trade.
There's a question in the chat about how to get these lines. Well, the teal one is standard VWAP. The dashed orange line is Kenny's custom VWAP script that he wrote that is available to members of Hit the Bid. Every member gets it. So if you want to get these lines on your charts, hitthebid.com is the way to do that. Kenny?
Got to get it.
Best in the business. Best in the business, Kenny.
Got to get it. Oh, by the way, if the market is going to sell off, it might happen tomorrow. I'm going to Georgia.
That's right. You're out tomorrow. I was going to say.
Every trip I've made to Georgia, we've had some weird sell-off. So
bearish data points.
If it happens another time, then it's definitely me.
Okay.
All right, go dogs. Go dogs.
All right, go dogs. See ya.
Kenny is old school. You know that you're an old school trader. This dude is still using Thinkorswim. Like that, like the kids these days, they don't know. I don't know about Thinkorswim.
I
think that's that's too abnormal.
You use it?
Those platforms were so good and so free when we didn't have many tools available.
Yeah, like, Thinkorswim is
stuck on them, and I get it.
Dude, my watch list on Thinkorswim still has 4 Qs.
I know.
Dude, because we built these things.
How long ago did they change it to 3 Qs? That's how old that watch list is.
I wasn't active when that was changed. So you're going back.
JC, don't tell us why they changed it.
I was a big Street Smart Edge guy.
Oh, wow.
I think they shut that down.
2011.
Thinkorswim. Or maybe the other way around.
March 2011.
That was before my time. Hey, we got Jeff Mackey in the green room here. Can I bring him
14 years ago, they changed it to 3 Qs.
Did we have that Pfizer chart or no?
Yeah, throw up the Pfizer chart and then we'll bring on Jeff.
We have Jeff and we have Sean, and I want to bring him.
Did Kenny just try to fact check my data? Leave the charts to us, Kenny. This was the biggest 2-day move for Pfizer in the history of Pfizer, at least going back 35 years.
Look at that, man. Wow. The biggest 2-day rate of change in Pfizer going back to 1990.
Do we have the absolute?
I mean, I'm more interested in this one, to be perfectly honest with you.
Give me the absolute.
Show me the absolute if you want, but I'm much more interested in the...
You don't make money on absolute on a relative basis, JC.
Thanks, bro. I'm more interested because I'm thinking about the absolute big moves, and there's huge absolute big moves when the market overall is moving, but that wasn't the case this week. Yeah. It wasn't like this was like some epic, historic rally in America, and Pfizer went up with it. Pfizer did its thing, despite a relatively muted overall market. Is all I'm saying.
That's
That's more impressive.
Yeah. Bang. Wow. Wah. I'll
But
tell
you're
you, it's
comparing
time
apples to oranges because now you're comparing it to that 07, 09 financial crisis. Like, I think the relative I think it all helps. It's all valuable. But
Look
the
at that
real
.com
story
bubble,
to
booyah.
me is the relative story.
Yeah, this is fun.
Go back to the absolute. Look at this. Oh my God, what a chart. This is a monster base. One day we're going to look at this base and we're going to say, wow, what a beautiful base. It tried back in 21, 22. It couldn't get it done, but it's getting it done now.
Yeah, that one is going to
It is,
be.
but they're worried about their AI and their quantum. We out here trading Pfizer, huh?
People are going to be writing about this base. The tweets are going to go viral on Twitter. Everyone's going to be like, oh my God, look at the base in Pfizer.
Yeah, Pfizer's going to
Maybe
be
get
at
it
like.
now. Maybe
Pfizer's
get it on the initiation signal.
Pfizer's going to be at like $40 in like 3 years. So you're going to be like, oh my God.
I love this.
I'm so in healthcare. I'm in the UNH Leaps free ride, right? No risk. December 27th.
Love it.
I got a free ride for 2 years, dude.
Wonderful.
Healthcare is a diverse space. You could do a lot of things. You can go to a lot of different places. You could buy offense. You could buy defense. You could buy a mix of both. You could buy high growth, low growth, deep value, like really cool stuff going on here. I'll just say one more time, and then I promise I won't mention Pfizer again for a while. This is my single favorite dividend play on the sheets right now. If you're a dividend person, I think you go big in the Pfizer right now. It's a monster yield. Even if they cut it, dude, it's still going to be a monster yield.
Is it a dividend aristocrat? Yeah, right.
Didn't they cut it?
No, they messed up recently. I don't think so. I don't think so. Not anymore.
Yeah, I thought they cut it.
Not anymore.
All right,
It'll be back on our list soon, I'll bet.
Let's talk consumer.
Yeah, we got to talk to Jeff and Sean. So let's bring Jeff on first, and Sean's going to be on. Sean's here as well. Actually, might as well bring them both on. But they went shopping yesterday, so I can't wait to hear about this.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Gentlemen.
Good morning, boys.
Wait, Sean, I'm bringing Sean on too.
How was your shopping trip?
Sean's got a primp. He's got a fashion show to do for us.
Sean?
We bought him some nice new clothes. You're not in your. Where's your outfit? What are you doing?
It's
we
got
bought
all
tuxedo
early
yesterday.
here. What are you talking about?
I
did send a picture in the Slack though.
Yeah, I got it.
Throw that up. Throw
slide
that up.
slide 3 here.
Look at this guy. Oh, Sean with the Canadian tuxedo. I like it.
I mean, look at that handsome bastard. Are you kidding me? It was unbelievable. People were coming from all over the greater San Diego area just to catch this fashion show. There's this giant just giving us a twirl right there in the Gap store. It was fantastic.
The woman who was helping us there, Jeff, you can attest to this. She was helping us out, and when I came out of the fitting room with that look on, she couldn't speak. She was taken back. She was losing control.
Breathless is fair.
Breathless is fair. What store is this?
That's Gap, which was kind of our biggest surpriser and my most frustrating name because they crushed. We went to every store and just kind of competed. We're like, who can sell Sean the nicest looking outfit? Which is it's all.
Were you open-minded to any outfit, or did it have to be this jean on jean situation?
Well, he's a fashionable guy, JC. We're not looking to dress him like a hobo. We're looking to dress him in the latest, hottest fashion, which happens to be a Canadian tuxedo.
Denim,
I don't know. I don't make the trends, but these
denim
are the
hot.
trends.
No, Mackie says denim is hot, so that's good enough for me.
We're bringing it back.
What was the biggest takeaway? So just so everybody knows, so Mackie and Sean went shopping yesterday in La Jolla, right? Is that where that was? The mall?
That was it's every town USA, the demographics straight down the middle, average everything. I'm kidding. It's like the nicest mall on earth. But what that really tells you is that's where stores kind of put forward their best foot. This is what we really want to look like as a store. We got the executives. They love to visit stores like that. And so if a store isn't making it in a place like UTC where the traffic's incredible and the business is great, they're not going to make it anywhere. And so it's the reason that I like to do kind of, days at the mall like that, as research goes, is because that's where you see what the store wants to look like. Every place else is going to be kind of a pale imitation. And we saw some great stuff. Frankly, the crowds were great. even relative to UTC. Most of the stores looked pretty solid. We saw some upside surprise. I didn't expect Macy's looked fantastic.
Was it?
Yeah. I mean, it's basically, I'm like, you guys, we got to hide the cameras because I'm going to just take a crap on this store for about the next 20 minutes as we walk through it. I expect it to be empty anyway, so who cares? We were greeted immediately. It was nice and clean. We got to see about 10 different brands. Ralph Lauren had a dynamite backup denim tuxedo for Sean that we almost bought, even though it was like $200. But then we walked into the Gap, which the stock has been kind of a pig, despite the denim resurgence. It's like the third biggest seller in the history of, or in American denim, and the stock hasn't done anything. But you know what? They were in stock. The place looked perfect. The management was friendly and helpful and just a little flirty. They loved Sean. They appreciated him. We put on some hot dance house music and had him do a spin for us, did a little dance. It was like Zoolander at the mall. It was incredible. It was a great day.
I'll tell you what, I was surprised that American Eagle completely sold out of jean jackets. They had nothing for us. That was the place I thought we were going to find what we were looking for.
Yeah,
Nothing.
good and bad with that, right? Because they're totally sold out of the Sydney Sweeney stuff. They're sold out of the Kelsey stuff. They've already announced that they're doing redrops, and so they're walking that fine line between scarcity and just being out of stock and pissing everyone off. You don't want to make stuff impossible to get, but a little scarcity is not so bad in a situation like that where the ads are working. And it's the stuff looked good. Again, every store looked good. Christmas is wildly underrated this year. I'm still banking against the idea that it's going to be a down 5% year. Whatever the consumer should be doing, they're shopping.
Jeff, this is a good point that I wanted to ask you. So you taught me that the holiday shopping season starts Labor Day, right? Labor Day or after Labor Day, or is it Labor Day weekend?
It's pretty much, by tradition, biblical tradition. I'm a student of such things. After Labor Day.
Okay.
Thou shalt start shopping for holidays after Labor Day.
Can you give us amateurs a little bit of a history lesson as to whether or not these holidays have exceeded expectations? Like last year, I remember you telling me total blowout, they crushed it, right? Can you give us a little history as to the last prior years and how that's changed?
I mean, it's like 2024 of the last 2025 Christmases have been the biggest ever. But what we've done.
So it's consistently the biggest.
Consistently, yeah. And there's always a pressure to start it earlier. Black Friday, the term comes from the idea that this is when the merchants broke into the black for the year. That's how poor the margins are, that they only are really making like 12% the last 12% of the year. That's when it starts. Thanksgiving is actually the third Thursday of the year because a guy named Frank Lazarus, who ran Macy's at the time, petitioned the president as a way to kind of boost spending in the Great Depression by making a longer Christmas season. So there's a long time-honored tradition of making Christmas longer and longer to kind of get commercialism encouraged in the United States. And you know what? It works. I'm totally there for it. I'm completely there for a Santa Claus parade.
You're the one that says it. Americans spend more money better than anybody in the world. It's not even close. Who's number two?
Geez, who cares? The Germans, pretty much, like the Germans and the Swiss.
It's so far down, it doesn't even matter.
It doesn't even matter. They beat us at golf and tennis, probably, but beyond that, no one else is even touching us. And this year, we ended up at Home Depot, as Spencer and I have talked about. Home Depot started the holidays August 3rd. Because of the tariffs, they took in all their huge Chinese yard Halloween decorations and they put them in the stores on August 3rd. They're kind of sold through. And so if you think Christmas displays aren't going out soon, you're wrong, because everybody imported all their stuff early because of the tariff madness. They wanted to get all the Chinese product in the stores early. And so you're going to start seeing Christmas. I mean, I think the back rooms are full. We saw Christmas socks. Where do we see the Christmas socks, Sean?
The only place we saw Christmas stuff was the place I least expected it. It was at Dick's Sporting Goods.
Right. I mean, they practically had sleds out for the snow that is inevitably going to fall here, of course, because it's a magical time of year. But yeah, Christmas socks at Dick's Sporting Goods. I don't know if those have been in the back room all year and just kind of waiting to come out, or if they, in fact, brought in the product early. But there's a little bit of Christmas breaking out at Dick's Sporting Goods, which is hilarious because it's 80 degrees out and we probably could have gone surfing right afterwards. I'm not sure when we'd use the socks, but we could hang them right from the fireplace, as of today.
I mean, Long Dick's has to be the best retail trade of them all. I mean, very few.
And just fun to say.
Throw up slide 2 there. Throw up slide 2. I mean, what an absolute monster this thing is.
And we spent some money.
It's been terrific. And one of the things Sean and I talked about is Dick's is one of those companies. Best Buy's another. Best Buy, it just has so many headwinds they can't get out of their own way. But it became a much better company during COVID, much more efficient, much higher margins. And they also benefit from what Nike was talking about this week. Nike managed to make their revenues look pretty good because they were stuffing things back in stores. They'd broken off a lot of relationships with the merchants, deciding they were going to make their own Nike stores. One of the great missteps in kind of consumer history. They're undoing that now. Now Dick's owns Foot Locker, missing the chance to rename themselves Dick Locker, which I think would have been the best name ever. But despite that misstep, despite that branding faux pas, they are now the beneficiaries of Nike just being desperate to dump merchandise on them. And we went in there. Sean found a great pair of running shoes, not Nikes, but they don't have a lot of shelf space.
Did you get the ons? You get the ons?
No, I went back to Hoka's for my running shoes.
Oh, you know, that's all the nurses wear the Hokas, right, Mackie? All the nurse girls.
Nurse women, JC, my God, come on. But yeah, they do. Those hotties are in there.
Honestly, the older women, I haven't seen it. It's more the younger ones.
They're still women.
Yeah. No, they
whatever.
Actually,
you know what I mean.
But they've gained huge share. And my point on the Nike is that once Nike left these stores, on and deck, they had those enormous runs that we were lucky enough to be long and then get the hell out of. But just kind of all these companies burst up, and it was because Nike just backed off and gave them the shelf space. And
you
so,
throw it up, please, slide 2. I sent you a message, Mackie, and you ignored me completely.
I was busy
shopping with Sean.
Oh, no, I actually didn't send you. I sent you the Louis Vuitton, but we'll get to that in a minute.
Louis Vuitton that might be topping.
Nike
looked pretty good. I mean, I can see the case for it there. And I'm super skeptical of a lot of the stuff they're doing. It's going to take a lot longer on a fundamental basis. But, I'm not going to deny the chart. I'm not going to miss it. I'm just saying there's plenty of time to catch this before it gets back to 170. There's a long road to hoe there. It's pretty,
the risk reward there, Mackie, man. This that squeeze that we're seeing right now.
Yep.
In Nike.
And you got a lot of stops, and people are going to get confused because I'm taking a dump on them fundamentally. People should understand. I put the fundamentals, the technicals, and the story, basically, for want of a better term, the narrative. Those are my big three. I want them all lined up. And you have a situation with Nike where they're not going to zero. They're not terminally stupid. They spent about 5 years just going in absolutely precisely the wrong direction, driving hammered into traffic with their headlights off. They managed to kind of get through that, and now they're just peeling in a circle. It takes a while to turn a ship like that around. They're a huge company, $100 billion market cap company, so it's going to take a while, but you truly have a ton of skepticism out there. Now, it's tied to a fairly expensive stock trying to pull off some pretty difficult stuff, so it's going to be a bumpy road. But like you say, JC, there's a real defined risk there, right? Like if they can break out above a couple levels, if that thing gets above 80, it's who's left. You had so many skeptics all the way down that this is a great example of a company. If I'm going to violate not having all three on my side for longer term investment, you can do pretty well just with defined stops on a name like this that really people have good reason not to believe in, but it's going to be getting incrementally better. And that's a great story. This is a stock you can picture an old school broker picking up the phone. How would you like to buy an American classic brand for 80% off? And it sounds great. Now, there aren't that many brokers anymore. There's not that much slow money anymore, but it's still a thing. It's
Mackie,
still a thing happening.
Mackie looks at the charts when he's calling out that 80 level. Yeah, that's the level. Yeah. That's the level. But you already have a level to the downside. That's more like the level to the confirmation, to add to positions, to confirm that you're on the right track. 80, spot on, Mackie.
Yep, there you go.
Hey, Jeff, let's also talk about two things that I observed yesterday. One being that the mall is definitely not dead, right? I mean, it was
so not dead.
We were there Wednesday at like 1 o'clock, and there were people everywhere. People were spending money. It did not look like the consumer is struggling in any way. And this was true outside of the mall when we went to the big box stores. And also,
we waited 10 minutes to look at a freaking car, to look at a prototype car.
That's where I wanted to go next. The one thing I did not expect to happen at the mall, Jeff, is that we got to sit in and experience cutting edge new tech in cars. We got to sit in the brand new Lucid, which was awesome. We got to sit in this. Let's talk about, Jeff, this car that we had no idea what this thing was called. It was called an Afeela. It's a new brand. It's called Afeela. It's a mashup between Sony and Honda. Sony Pictures and Honda. They're making a car, JC. Sony Pictures and Honda, and it's beautiful.
It's actually amazing, and they're like, this is about giving you the feels. It's about and it's the kind of pop-up where they literally can't tell us the price of the car. They can't sell us the car. They're just like, hey sailor, look at this, we're going to whet your appetite, demographic group, and we were in for it. And you're kind of laughing at it and kind of semi-ironically there. You sit in the car, and it was honest to God like sitting in the studio with just your favorite band, just crew. I mean, it was incredible, immersive sound. It's got a little thunder, there's LiDAR on the top, so you don't have to pay that much
self-driving,
attention.
obviously, because you're watching a show?
Oh yeah, it's they put every piece of tech you could think of. This is a total car by committee. It's like, you should have his LiDAR. Let's put a screen right in the front and make it so you can watch movies while you drive, which you kind of can. And it's like, what a terrible idea, but why not? Because it can look awesome, and it looks awesome. Weird way to sell a $110,000 car next year, but it's going to kick ass, and it's going to sell more than you think, because it's honest to God. It's like a sensory chamber for the highway. It's just kind of an incredible thing coming, and the type of magic you see at the mall.
Yeah, didn't expect that at all.
Mackie, what's the
field trip yesterday?
What's the food sitch at the malls? Like, who's making the money on the food? Is it Shake Shack? Who's making the money there? Starbucks?
I'm still not loving them. It's Starbucks has a lot of fixing to
Cheesecake
do.
Factory?
And so, Cheesecake Factory is still it's tough, man, to sell cheesecake in an Ozempic world. It's you're better off. There are just some trends that are not working in favor of the mall food circuit. So I guess too many people are waiting to get into the Feely car.
Or any of those, like the sweet greens, like some of the greens?
They're starting to get interesting. Not going to go to zero. You asked me about kava. It's do I want to get in the way of that? I don't know. I listened to the call when they blew up last time, and kind of seems like they don't, the management wasn't really experienced enough. You went public fairly early there. You got a really nice pop, and now all of a sudden they're talking about how they have to start advertising. I would kind of like my CEO of my restaurant company to understand marketing before he's actually taken a company public and is trying to turn it around. That to me is not something I want to be funding his learning on that. I don't want to pay for his MBA with my stock investment.
Can you throw up the Louis Vuitton? This is a $300 billion company. Massive underperformer this cycle. Massive underperformer.
Yep.
Sideways, just done nothing. Nice little failed breakdown. Filled that gap from post-COVID. I mean, you want to talk about a clean setup. I really like the Louis Vuitton here. One of the biggest, most important consumer companies on the planet, completing a massive top in the middle of a raging bull market. Yeah, I don't think so, Mackie. I don't think so.
No, I mean, it's all about kind of how you set up your risk reward. This is another play that has been faced by kind of some missteps, a really great run that they had, and also, it's a what should the consumer be doing? There's a lot of ideas about the high-end consumer has to fold here, they have to buckle here. The thing about being a high-end consumer, you don't really have to do anything. So they're going to want what they want. Now, that's not going to save all of them, but yeah, this is a defined risk play if you want to do it. It's not kind of my bag right here. I would much rather go a little more mainstream and the stuff I can kind of touch and feel. And these guys are a little bit, a little highbrow for my personal shopping taste. But
they got Sephora, they got Christian Dior, Givenchy, Tag, they got Tiffany's, Dom Perignon, they got Belvedere and Marc Jacobs. I mean, they got so much stuff. Is there like a theme here at all of why they've been struggling? Is it one thing, or some of their bigger brands have struggled? What's the story there?
The dinner bell serving, tons of Chinese exposure. China's been a train wreck for everybody, man. China has been really bad. It was bad for Nike, terrible for Starbucks. Anyone doing a lot of business there is some are doing okay, but for the most part, it's been a fairly big headwind to kind of get in your business. I mean, the spread when you saw Nike between the States and pretty well everywhere else, they were okay in North America. It wasn't the comeback of all time, just an absolute dumpster fire in China. And that's kind of one of the issues you have there. And again, you get into a situation where people will bet on your narrative goes to hell. It's like they're pulling back on the high end. We're finally saturated in our purses, and there's something to be said for we sell $2,000 purses that last a quarter of a century.
Yeah.
That there's going to be ebbs and flows in businesses like that, and it's a lot of them. Or as you mentioned, also you got a lot of spirits in there. Spirits are another headwind. It's if you're
Yep.
running a company that sells expensive whiskey and cheesecake, you gotta, you're probably in a lot of trouble there. That's really not a space you want
Speaking
to
of
be in.
spirits, that's the one thing that surprised. Another thing that surprised me is yesterday when we went to Target. You know what we walked out of there with, JC? Nothing but booze. That's what we walked out of Target with. That's not something I thought you could even buy at Target.
Depends what state you're in.
It depends on what state you're in. It absolutely depends on what state you're in. And Target kind of was doing okay on staples. I want to like them. The store was a little bit cleaner, but we didn't get any impulse items. Again, the stuff you look for when you walk into these consumers. Did I spend more money than I expected? And that was absolutely not the case. And then we stood in line for 10 minutes. And I just tried not to say pissy things. I become like a surly old school baseball manager every time I'm in a Target. I just want to start flipping tables and be like, God damn it, you're just telling every customer to go straight to hell. This line is telling every single customer in this store that you don't like them. Why are you telling customers you hate them? All they're trying to do is spend money. I start chanting. It's a dad thing. I'll work it out in therapy.
We stood in line. We stood in line on our checkout probably longer than we actually shopped, and that's unacceptable.
Unacceptable. That would never happen at Texas Roadhouse.
Hey, I went to Texas Roadhouse this week. It was great. It was great.
I wasn't kidding, right?
All right.
No.
I told my wife we have to go. I told there's one near me.
Go observe. You don't even need to eat there. Just check out this operation. It's very impressive.
The place was, by the way, it was jammed, JC. I mean, luckily my wife had the foresight of like getting on their wait list an hour before we went out there. Thankfully, because when we got there was a line out the door. I mean, they were rotating people quickly through there. I mean, it's an operation, just like you said, man. I was impressed.
Very impressive.
And serving people well. That's the final thing I'd point out about the store visits is it's really hard to get your associates, to get the people that work in a store to act friendly, act courteous, do the stuff you need them to do if there's a pissy culture underneath. That's one of the problems Starbucks has when you're seeing, it's why they're doing these sudden slowdown, these closings kind of out of nowhere rather than announcing in advance. It's because they just have a surly entitled base of employees who, they're forming unions. They're going to sue because they can't wear what they want to the store. That's not someone who's going to serve you coffee with a smile. It's going to make you feel like they spat in it. And you just want to be looking as you go through a store a little better than expected. Was my customer experience better? As Sean said, you go to a Texas Roadhouse, all of a sudden the service is amazing. It's packed. It's got an energy. It's a vibe. Are you supposed to like it? Do you like it ironically, maybe a little bit? I don't know, but you're having a good meal, and that's kind of the point. Look at Real. God, that's a great chart. Damn it.
So my sister worked here. My sister worked here for a long time. A few years, and so she's got a bunch of shares. She's always asking me about it. So I figured, let me ask the guy who actually knows, because I don't know anything. Should she hang on? What do you think?
Yes, love it, hodl it.
Wow.
It's really these JC. I've got a kind of a long time theme, and I think Peloton's a buy here. Speaking of which, because it's a similar company, the names that didn't die after COVID, the names that got built up in a ZERP world, and then they went into COVID, and they just built these enormous moats. Real being one of them, where if they didn't exist, you'd like them to, but no one's going to really fund a company that's going to sell used product. But you know what? I've used the Real. It's a great place. Kind of, they're certifying, they're verifying. You pay a little more, and they create a really nice gifting, in particular, experience with customers. And these companies kind of develop, and they don't go out of business, and they become more and more financially viable. Real is the first to turn the corner. I like Stitch Fix the same way. I like Peloton the same way. I like a lot of these subscription businesses you would never make again.
Why do you say gifting, Jeff?
It's because I've bought my wife jewelry there. And so, if you tell them it's a gift, they'll wrap it, they present it, they do all that stuff for you, and it becomes a classy thing. So I'm not just buying a used piece of crap. There's a big difference between, geez, honey, I bought this on eBay, and, geez, honey, here's a vintage watch or a vintage, necklace or something that I bought you on Real. It's verified. They've checked it out. They told me exactly what kind of condition it's going to be in. And it's a nice market. It's really, I love the idea of we were victims of a theft. It's a long story, but rebuilding a jewelry collection with stuff that's kind of classic stuff you don't have to dig that much for, and you're not paying those sort of, that crazy premium you get at the Rolex store when they pretend they're not selling you watches and you got to get on a list or do any of that crap. Real is a place you can actually buy this stuff and you know what you're getting. And that confidence you have as a consumer is super important. Now, is it going to be kind of, real bubble days type of stuff? No, it's not going to be a $50 trillion company, but it's definitely a business that deserves to exist. And as these companies get into a profitable, cash flow positive, quarter after quarter type of situation, I turned Sean on to Stitch Fix for the same reason. As they kind of discover how to rebuild their customer base in the wake of the COVID push fading, all of a sudden you have a sustainable business with the moat that no one else is going to invest in them. You have great installed customer base. And, as I'm doing now, I'm not even long rail right now. I'm happy to advocate for it and say, you know what? This is a name that works. It's a name I haven't looked at it that long, but they've come a long way and have deserved to. It became a real business. It went from kind of a fad COVID name to a real company that deserves to be viable for a long time.
By the way, thanks for turning me on to Stitch Fix. So far, I'm a big fan. So far.
As you will continue to be, right? Because it's you enjoyed shopping. I didn't get the sense that it's something you love going to the mall all the time. So it's nice. You just have to go every once in a while. Now we know your size at the Gap. Stitch Fix can send you a little something, a little more denim next quarter, and hey,
look,
you like it.
We joke that I'm not a mall guy. I don't enjoy shopping for myself, but I had fun yesterday. That was fun. That was like, a fun field trip. I learned a lot. We didn't even mention that our friend Herb Greenberg came and hung out with us, and
Herb was there too.
Herb was there. Herb loves a good store, man. I think he was the only one that was a little disappointed that Macy's was so good and friendly. Because he has kind of it gets a little angry about the department store service level.
When we were standing outside the door to go into Macy's, Herb decided to right there at that moment drop a laundry list of all the things that he's disappointed about for Macy's, and we should look out for that. And we went in, and guess what? We didn't find any of that stuff. It was great.
This is real channel checking, Jeff. Like this is like real.
Yes, it is. This is an actual business. You all these. You walk into Dick's and there's like a few dozen tickers there. That there's actual companies that you can see how they're really doing in the marketplace. It's not a be all end all. You eventually have to check the financials. But again, if you go out to a store, whether it's a nice store or a bad store, you got to figure out who the audience they're trying to address is and are they meeting expectations. You'll find there's a pretty strong correlation over your investment returns and whether or not a company is actually able to profitably exceed expectations by just a little bit over and over again as you go out to the stores.
Dude, I love it. One name. The most impressive one. Was it Macy's? That was the most impressive one, or one that stood out?
Gap is executing the best. Macy's was more a case where it's like, wow, you staffed the place and actually someone's had a mop in here in the last 6 months. Huge upside surprise. That's not the kind of surprise that I'm talking about. I'm talking about, Gap was in stock in the stuff that people wanted and doing what they should do, which is having a nice wide selection of basic goods. And that's kind of what it looks like when they're executing. Doesn't make it the sexiest story in the world, but man, that's been public for 30 odd years. It's not going to be the sexiest story in the world. It's going to go back to 30 if they can actually get a hold of their tariffs.
Which is fine.
Yeah, which is fine. I don't mind. 45%, that works for me. I'm good.
Yeah, nice.
All right, I want to mention that Jeff and Sean had a camera crew following them. So yesterday was documented. It will turn into a nice little video. It'll be out hopefully next week, and it should be fun. Can't wait to see what you guys got up to yesterday. So,
good
Jeff,
times, man.
Sean, thanks for joining. Jeff, somebody made a comment in the chat that you narrate on malls like a baseball announcer and comments a baseball game, which I tend to agree with. Actually, you're really into it.
Absolutely true. Absolutely true.
Best in the business.
Thank you, gentlemen.
All right, Sean, Jeff, thanks a lot, guys.
Appreciate
Absolutely.
it,
guys. All right, let's get out of here. Before we go, I want to mention a special Gold Rush stream today at 2 p.m. Jason Purz and I believe Steve Strazza is going to join him. If I heard a rumor correctly, they're going to talk about the next big move in commodities: gold, silver, copper. The train's left the station, right? Train's gone, but there's another train coming around, right?
Yep.
They're talking about that at 2 o'clock. I'm going to drop the link in the chat right now. It'll be on YouTube and on stockmarkettv.com and allstarcharts.com, actually. So thank you to Jeff. Thank you to Sean and Kenny. Strazza is getting ready to go live in a little over an hour for his weekly strategy session for Break and Multiplier members. Kenny will be live at 11 o'clock on YouTube, and Louis will do a video for his members this evening as well, talking about crypto. That's what we got today. Thank you for watching. Go make some money, and we'll see you tomorrow. All right?
Adios.
Have an easy fast to all those who are fasting.
YOLO responsibly.
And that.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground.